Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Justice here for Tackle Train to do the market recap video for Monday this week. And today, an interesting day in the market. Not down that much, only down about 12 points in the S&P 500 today. Only down a little bit more than a 0.5%. But I think it's actually a fairly important in terms of the technical price action of the marketplace, just given the fact that the market had been hugging a fairly important support level for pretty much the entire year here. And if you look at the support level I'm talking about, it really kind of goes up like this. So you have support here, support there, just constantly hitting on that support level, and it broke that support level today. So it broke a fairly important support level. It got underneath the 2100 psychological level that it had been maintaining for the better part of the last few days and better part of the last few weeks. And so it's underneath that major support level at 2100. It's underneath that technical trend line of support as well. And obviously anybody's guess is as good as mine in terms of where the market goes, because it's so I don't want to say it's volatile, because it's not, but it's very unpredictable in terms of its price movement. What will the Fed do? What will they not do? When will they raise rates? When is Greece going to have some degree of compromise on actually paying their bills in some capacity and whatnot? And that's been going back and forth, back and forth, back and forth. But it really interesting that it did break that level today, currently sitting at the 2080 level, and really kind of it's the next support level right down here at 2070. But that's just a minor level of support. You do have major support right here at the 2040, and then all the way down here at the 2000 mark. I see this market continually testing down right now, just given the fact of what we're seeing. And we just saw the worst 3 days in the stock market today, Friday, and obviously last Thursday, since we saw last March in terms of this price movement back down into support. So I do anticipate that continuing to move back down as we test further on into the support levels and as well. Now, from an economic perspective this week, there isn't a just absolute ton of economic data this week. However, we will get some very important results coming out of retail sales on Thursday, the PPI report on Friday, as well as the University of Michigan consumer sentiment report coming in on Friday as well. So very light week economically. We're not dealing with any Fed action this week. Not a whole lot of Fed speeches out there. We're not seeing any central banks reporting monetary policy over the course of the next week or so. The big week that you really have to kind of consider is not this week in the market, but next week in the market. Next week in the market is an absolute just flat out major week in the market. You have starting in on Wednesday, you have the official bank vote for the British pound. That's just kind of like the Fed meeting minutes. However, on Wednesday, you have the FOMC policy statement. That's coming in on June 17th of next week. Now, for a couple of years now, I've been projecting that June was a likely destination for liftoff with the Fed fund rate. However, as we've seen, more economic data, and the Fed is very data driven right now, everybody's been pushing that out into the fall. I don't want to say I'd be shocked to see an increase in the Fed fund rate. There's many people who would support it. I certainly would support it as well. However, it does look like the data has represented a pushback from their liftoff into the fall, maybe September area. But you also have the SNB, the Swiss National Bank, reporting their monetary policy. And whatever the Swiss does is ever since they decided to depeg in January, anytime they speak, if they say anything at all, is very interesting to that as well. And then you have the Bank of Japan coming in on Thursday night with their monetary policy. So we have the Swiss, we have the Fed, and we have the Bank of Japan all reporting monetary policy next week. week. Price action, we did break this support level, this trend line. It's going to be interesting to see kind of the movement down here. Kind of, I don't want to say massive volume, but over the last 3 days, we did have average or above average volume on the sell-off. That is always a negative sign as well. And we saw a couple reports today. The experts are starting to be leery of the quarterly reports that we are seeing out there. They're starting to be leery of the economic reports that we're seeing out there. And if those of you who are loyal members of Tackle Train, we've been a little weary or leery of the economic reports and the earnings reports we've been seeing for quite some time. And so I think the longer this rally does happen, there's going to be more speculation to the downside, just given that more and more people are starting to shall we say, not buy the economic data that we're seeing coming out of our economic reports. The opium for the masses to a certain extent. So we did break some minor support levels. It did get under that psychological level of the 2100. Look for the market to continue to push down, and a neutral bias, in my estimation, is probably preferable. And also, interesting enough, the S&P 500 is now red for the year. We're about halfway through the year so far, and we are now red for the year in the S&P 500. Retirement accounts are negative for the year so far, because you still pay fees, even though you could do it a little bit better than the Wall Street people who say they manage your funds. So looking at the technicals here, we got a little bit of a negative reaction in the market here. Look for it to continue to push down in the market. I don't think it's time to panic yet, by no means. A 0.5% movement isn't nothing shocking, but that's kind of what we're seeing in the stock market itself. Let's go look at some of the other marketplaces out there as well. Crude oil took a little bit of a hit today, coming back down to 58.26, really just kind of going neutral over the last month. Naked put still on crude oil is the word of the day, in my estimation. The dollar index coming out of last Friday. Last Friday, the market had a very positive reaction to the jobs report last Friday. It gave up all of those gains and then some. Honestly, I've been doing the Forex report over the Tackle Trading for 8 months now. Every single week, been analyzing the dollar. I've been, nailing the dollar for a very long time now in terms of understanding the price movement, understanding the key levels. But right now, I'm looking at this dollar market, and I just don't know if anything outside of a day trade is in the cards right now, just given the volatility, the lack of direction, the lack of confidence in any one of the movements here. You do have a little bit of a retracement here, and as long as it stays up above 95, I'm still a pro dollar above 95 here, but that might come back down and break down and come back down into the 93 levels. So, anything above 95, I'm bullish dollar. Anything under 95, I'm bearish dollar. Gold had a good day. Obviously, the market went down. Gold went up about 0.5%, up about 5 points so far today. Silver kind of got beat up today as well. The VIX had a very positive day for all those of you who are long VIX, and I am long VIX right now. So I'm not short market, but I am long VIX right now as well. But one thing I do want to show you is natural gas here. Natural gas really just bouncing off that key 12.5 level. Naked puts on that right now is the name of the game as well. But it wouldn't have shocked me to see natural gas rally up into the 14.5 to the 15 level as well. So that is a look at the stock market for Monday this week, and I hope you enjoyed the report, the market recap. And if you like what we're doing, guys, go over there and check out the pro membership of Tackle Trading. We're changing lives one trade out a day with Gino scouting reports in the options market, mine in the Forex market, Tim in the commodities market, as well as check out my Forex Trading 101 series for all the members over there at tackletrading.com as well.